Over the last 2 months, we've seen a lot of significant changes in the housing market. And in Orange County specifically, we are starting to see the housing market slow down. But does that mean that we're going to see depreciation happen as we head towards summer? That's what we're going to talk about on today's episode. Hi, I'm Josh Alexander with The Brokerage and your host of Orange County Housing Market News, your one-stop shop for all things Orange County real estate. So on today's episode, I'm going to be going over my June housing market forecast to give you an idea of what to expect in the housing market in Orange County over the next couple of weeks and few months as we head further into summer. So let's go ahead and get into it. Okay, so like every one of these monthly forecasting episodes that I do, we're going to break this into 3 parts. So part number 1, we're going to talk about what's been happening in the housing market. Part number 2, we're going to talk about how that's impacting today's housing market as well as the next couple weeks and months. And then number 3, which is what everybody usually is looking for, how that actually impacts you as both a buyer and a seller if you're thinking of entering the market as we head into the summer months in the housing market in Orange County. So let's go ahead and start looking at some of the data that's been coming in over the last couple weeks and how that's ultimately going to impact what June looks like for the housing market. So let's start with the demand side first. So on the demand side of things, demand this year in Orange County actually peaked at the end of March and has been on a steady decline ever since then, which is a little bit atypical for Orange County. So usually we're seeing demand peak right around now when kids are about to get out of school, right as we head into summer, and then we start seeing demand start slowly drop after that. However, we saw that happen a lot early this year. In fact, right now, the demand numbers for Orange County are at the lowest level they've been in a lot of years. If you take out the 2020 year, which was obviously an odd year for real estate and everything else in the United States, you can see that demand is significantly lower than where it has been over the last couple years. And now we're finally starting to see the impact in the data of this lower demand that we've been seeing over the last 2 months. And one of the main things that we're looking at is the average days on market and how that is changing. So the average days on market, if you're not aware, is basically when someone puts their house up for sale to when it goes into escrow. So at the beginning of March, we are looking at an average days on market in Orange County right around 22 days. As we headed through April, it went up to about 29 days. And as of today, we're right around 38 days. So on average, every month for the last 2 months, we've seen the average days on market go up by a little bit more than a week every single month. Now, some of you might be thinking, I was expecting a lot more of an increase in the average days on market because demand has been going down so significantly, but you have to remember that the Orange County housing market and the housing market in general is not something that's going to flip on a dime. It's a giant ship. It's going to take a long time to be able to start steering it in a different direction. So yes, demand is going down. Yes, the average days on market is increasing, but don't expect all of a sudden one day you're going to see days on market go from 38 days all the way up to 90 days. It's not going to happen anytime soon. It's a slow, gradual process that builds on itself month by month. Okay, so the next data point that I want to look at that you'll probably find pretty interesting has to do with affordability. So how affordable is it to be able to purchase a home in today's market when interest rates have shot up so significantly compared to other times in history? So I'm going to pull up this chart right here. Again, if you're listening to this on podcast, I apologize. You can check out the YouTube channel or I'll kind of walk you through some of the basic points on here. But I want to pull up this chart right here that goes over how affordable a monthly mortgage payment is compared to different times in history. So what it looks like is going to be the median income, the median house price, and then interest rates. And it basically tries to determine what percentage of your income is going towards your mortgage payment. Obviously, the higher percent, the more unaffordable homes are going to be. So let's go ahead and check out this graph. Right now in Orange County, if you make the median income for Orange County, which is right around $106,000 a year, and you're trying to purchase a home at the median price of Orange County homes right now, which is a little bit above $1.3 million, you're devoting 66% of your monthly paycheck to the mortgage payment. That's the highest it's been in any recent history. That's even higher than it was leading up to the last housing crash, which was in 2006, when it was 59% of your monthly payment. So obviously this is not a good thing. Now the second thing I want you to look at on this graph, which is probably the most shocking in my opinion, is how much affordability has changed in just 2 years. So if you look at 2 years ago, you were only devoting about 37% of your paycheck to your monthly mortgage payment. Compare that to today, which is 66%, you've almost doubled the amount of money every single year that you have to put towards your mortgage, advantage because not only has appreciation been going crazy over the last 2 years, but now on top of that, because interest rates are much higher, affordability is significantly lower than it was just 2 years ago. So you definitely want to look at that, and it is a red flag that you want to pay attention to, because obviously as less and less people can afford homes, demand is going to go down more and more. Okay, so this leads me to the biggest question that are on a lot of buyer and sellers' minds right now. Affordability is at all-time lows, demand is significantly lower than where it usually is, so why have we not seen housing prices adjust and start heading downwards instead of continuing their upward climb? It has everything to do with the biggest issue in today's housing market, which is inventory. Inventory is still significantly lower than where it should be for this time of year in the Orange County housing market. So even though demand is down and affordability is down, there's still enough buyers out there to be able to purchase these homes, gobble them up, and be able to keep the inventory at an extremely low level. And on top of that, less and less homes are still coming on the market. So for the month of April that we have the data for right now, there was 17% fewer homes that came on the market this April compared to a typical year in the Orange County housing market. So Orange County and much of the United States right now is just not putting enough homes on the market fast enough to get us to a point where supply is going to be higher than demand anytime soon. Even with everything working against the demand side of things, supply is still being gobbled up. We're still in a seller's market. Appreciation has slowed down, but it is still happening week after week and month after month. And again, that has everything to do with inventory, and those inventory numbers are just not projected to go up significantly anytime soon. If you're wondering why, you can check out one of the latest episodes I did that really went over why this market that we're in right now is nothing like the last market we had right before the housing crash, and that they're completely different beasts, and you need to be able to approach them in a completely different manner. So if you haven't checked that video out, I'll put a link right up here on YouTube. If you're listening to this on some other platform, go check out my YouTube page by searching Orange County Housing Market News. Okay, so now that we've recapped some of the data that we've seen over the last couple weeks and months, what does that actually mean for the June housing market in Orange County, as well as the next couple months as we head further into summer? So let's go ahead and take a look at the demand side first. So like I said, demand is most likely going to continue to decrease, not only because traditionally that's just what it does this time of year, but we're looking at some other indicators like mortgage applications, so how many new buyers are applying for a loan to get a mortgage, and we're seeing those numbers continue to decrease week after week, which is a very strong indication that we're going to see demand continue to decline as we move through June throughout the rest of summer. So demand is going to continue to go down as we head through June, which means the days on market is going to continue to rise. And yes, we will start seeing inventory continue to come on the market. However, again, it's just not going to be at the pace that we need to be able to make up enough to get us anywhere close to even a balanced market, not to mention a buyer's market where you start seeing home values fall. Now, sticking with the inventory and supply side of things, you might start seeing headlines like inventory has increased 20% over the last couple weeks. Homes are coming on the market at a faster rate, but you do have to understand that we started at such a low rate that even if we increase the inventory by 10, 20, 30%, that's still not going to be anywhere significant enough to be able to get us out of this hole that we dug ourselves over the last 2 or 3 years to get us to a point where inventory is going to be high enough to really start seeing the market shift in a very significant way. Yes, it's going to start taking longer for you to sell a house that you put on the market. Yes, buyers are going to have more options to choose from. However, we're still going to be in a seller's market for the foreseeable future. Even though the average days on market right now is at 38, technically it's a seller's market anything under 60. So we still have a long way to go. And like I said at the beginning of this episode, if we're only seeing the average days on market go up by about a week or 10 days every single month, we won't be out of a hot seller's market at least for another few months, and then we might be in a slight seller's market as we head towards the fall months. But again, when we're in a hot or slight seller's market, home values are still rising. Hey, really quick, sorry for the interruption, but are you finding this content useful? If so, can you please consider hitting that like, subscribe, and follow button below? And if you're watching this on YouTube, don't forget to hit that bell button as well. That way you're notified every single week when I release a new episode. Also, if you have any family or friends that you think might find this useful, would you please consider sharing with them as well? I would really appreciate it. Okay, back to the show. Okay, so what is my advice for both buyers and sellers if you're looking to enter the market in, let's say, the next 30 to 60 days? Well, on the buying side of things, every week that goes by, you should start seeing more and more inventory to choose from and less competition. We've already been seeing that for about 45 days, I'd say now. We're seeing it on a daily basis. The data is finally starting to show that the housing market has indeed slowed down. And when sellers are getting offers, instead of 10 to 15 offers, we're seeing a lot of times we're going maybe 2 to 6 offers per house, which again is still a hot seller's market, but nowhere near what we were seeing 2 to 3 months ago, as well as for the last 2 years. So if you're a buyer right now, yes, interest rates are higher. Yes, your affordability has been significantly reduced since the beginning of the year. But again, and I say this over and over and over, if you're looking at buying a house for the long term, which is 5+ years, what you want to be focusing on is that monthly mortgage payment. Is it affordable for you and your family? Is it going to put financial stress on you? Can you get into the type of home that you want to be in with that payment? And if you can, now is a good time to continue looking, because if interest rates go up, you're going to be patting yourself on the back that you got a better rate. If interest rates go down in the future, you're going to be able to refinance and maybe reduce your monthly mortgage payment and be able to save a little bit more money. So if you can afford to purchase a home, and if it's going to get you the type of home that you and your family are going to be comfortable living in, then I highly recommend that if you've already been looking for a home, that you continue looking for that home and do not give up. And if you haven't started yet, now is the time to talk to a lender, get that pre-approval going if you need a loan for the property, because the longer you wait, appreciation is still continuing to happen week after week, and who knows what interest rates are going to do. If inflation continues to be out of control, you can expect interest rates continue to climb. Most experts don't think it's going to climb significantly higher than where they are right now by the end of the year, but again, those are just predictions. No one has a crystal ball. We don't know where interest rates are going. And like I said, if they end up going up by the end of the year, you're going to be patting yourself on the back. If they start going down, you can always refinance. But the last thing you want to do is wait it out just to see what happens over the next couple months, because there is a very high likelihood that home values are going to be higher, and you're going to have to pay more to get in that same type of home that you could have got into right now for a much lower rate. So keep that in mind if you're thinking about buying a home. So on the selling side of things, you guessed it, the faster you get your home on the market in today's market, the better you're going to be. As the weeks go by, it's going to start taking you longer and longer for you to sell your home. You're going to have less and less buyers looking at your home, more and more competition, which ultimately means for you, you're going to have less offers on your house. And when you have less offers on your house, that means you have less leverage when you go back to negotiate to try to get them to raise the price. If before you had 10 to 15 offers, but now you only have 2 to 5 offers, you're going to have a lot harder time not only getting the best price for your home, but negotiating all the other terms as well, like inspection contingencies, appraisal contingencies, loan contingencies, that traditionally in the last 2 years, a lot of buyers were willing to waive or significantly reduce. We're starting to see more and more buyers no longer waive those contingencies, which means that every time you get into escrow, it's going to be more risky that it could eventually fall out, because the buyers are able to put more protections in place in the contract to be able to get themselves out of the contract if they find something wrong with the home. So the longer you wait at this point, not only will it be harder for you to sell your home quickly, but it's going to be much harder for you to negotiate all the best terms in the contract when you just have less buyers and less offers to choose from. Now that being said, we do have to remember that it is still a seller's market. As long as it takes less than 60 days to sell your home on average, we're technically in a hot seller's market. Right now, we're at 38 days, so we still have a while to go before you have significantly less leverage, and maybe you're only getting 1 or 2 offers on your home. However, that will eventually happen, especially as we get closer and closer to the end of summer. So again, the earlier and faster you can get it on the market, the better off you're going to be. Now, I've said this so many times that I've lost track, but the most important thing for sellers right now is to make sure that you're pricing your home correctly. We're seeing the data come in, and we're seeing it on a daily basis as we go through our normal routines as real estate agents. The sellers that are getting too overly ambitious and putting a high price tag on their home over market value are really shooting themselves in the foot. We're seeing the number of homes that are having to do price reductions continue to increase week after week. They started in March in the mid to high teens in Orange County, but now have progressed to about 22% of all sellers in Orange County are having to do price reductions. Now, it is important to remember that that's still below the historic average, which is usually in the high 20s. However, that trend is showing that week after week, we're still getting a lot of home sellers that just have not adapted to the new type of market that we're in and are way overpricing their home and then having to do price reductions, which at that point opens up up to a lot of buyers that are looking for a great deal because they see that person reduce their home price, and they're going to start throwing out lowball offers. So it's still extremely important to make sure that you're pricing your home at or maybe slightly above the last comparable sale, but you need to stay within market value because buyers know when it's overpriced and it's just going to sit on the market, and eventually you're going to have to do a price reduction. On top of that, we're also seeing the data shift in terms of how much over asking buyers are actually paying for homes right now. So over the last 2 months, we've seen on average that buyers are willing to pay about 7% above asking price to get in a home. However, in the month of May, we saw that go down to 104%, a 3% drop in just 1 month, and that is going to continue. I would not be surprised that as we head to the end of June, if we see that drop to maybe 101%, and then as we head into July, you're going to be looking at closer to 100%, which basically means that it's selling for the price that you put it on the market for. So again, if you're overpricing homes right now, it is really a mistake because you're going to be shooting yourself in the foot. The market has shifted. Yes, it's still a seller's market, but you need to put your house on the market at the correct price the first time and not rely on price reductions, because ultimately that's going to end up getting you a lower price for your home. And sellers, the other thing I want to talk about when it comes to this ratio of how much over asking an average home is selling for in Orange County, as that number drops, so does the actual profit on your home. So if it went from 107 to 104%, which is what it did over the last month in Orange County, that's 3% profit that you're losing out on. And if appreciation is not keeping up with that, which it hasn't been, appreciation is probably going to end up being maybe 1% over the last month at most. You would actually most likely be making more money by selling your home a month ago compared to now, because buyers are now willing to pay a smaller premium on any home that hits the market. And yes, when you look at the number, you do have to understand that some of that difference in that 3% has to do with people overpricing their home and then having to reduce it back under asking price, which is why that number drops. Overall, it's still a number you want to pay attention to, because if that number is continuing to shrink at a quick pace and appreciation is not going up, again, the faster you sell your home, the more profit you're going to make, even if we see a slow appreciation, which we expect to see as the summer months go on. So I hope that makes sense. Okay, so for the month of June, as well as the first couple months of summer, you can expect the housing market to continue to decelerate week after week and slow down. Is it going to be a buyer's market anytime soon? No. However, buyers will have more and more opportunities as more and more inventory hits the market. And on the selling side, you're going to have more and more competition as the summer months continue to progress. So I hope you found this information useful today. If you did, again, don't forget to hit that like, subscribe, and follow button below. I would really appreciate it. And until next time, stay healthy, stay happy, and I'll see you on the next show. Bye.